Boom! Guys, Crypto With Dinny and it's Dinny here. Good evening to you. It's Jeannie Mac. 11% for Bitcoin today. 13% for Ethereum. Welcome to Crypto With Dinny. This is where people come to learn how to build retirement plans. Okay? We build our pension plans around Bitcoin and all the amazing things that crypto markets have to offer. We leverage all that. You can keep your existing pension plan, chip into that for 60 years, but build this Bitcoin one, because I think a Bitcoin one will retire you a lot sooner. That's what we teach here anyway. Guys, it's been a good day. Crypto's had a bit of a pump, and I thought I'd jump on and just drop a few Dinny bombs, drop a few little bombs. I've got my surgery out here. I'm gonna have a nice little cold Guinness. I went on the dry January, and I only got this yoke, so I only have to take it out of the wrappers, and they're savage. These surgery cans of Guinness. So I'm looking forward to trying this. We'll have this one now in a few minutes when I finish with you lot. So we'll look forward to that in a minute. Don't worry, it's backwards there now. When I put it on YouTube, it'll be the right way around. So Bitcoin today, it's done 11% in a day. Now, I don't even really look at the price of Bitcoin too much, but I dollar cost average, and Friday is my day when Michael likes the nitro. Yeah, I tried them over Christmas, and the cans are unreal. And then I done the dry January, and I was sick. It's like, oh, they're amazing. I want to try another one, so I'm looking forward to having this now. I only have the one can, that's all I have, but she'll do. She's been in the fridge. So I do my dollar cost averaging on a Friday, and I bought my Bitcoin there this morning, and then I was moving and I was messing about and I was back in the platform because I was transferring something else, and I was like, Jeannie, I only bought 200 quid's worth of Bitcoin and now it's worth more than 200 quid. What happened? So then I went and looked at the price. I was like, oh, holy God, be God. She fairly moved there today. This is one of the lessons in crypto that I hammer on all the time. Your success as an investor, okay? There's key days, alright, when you can either destroy your investing or have the magic, okay? I'll give you a couple of examples. You can invest for 10 years and then you can have a bad day, a bad decision on a bad day, and you wipe out 10 years worth of investing. And in crypto, it's the exact same. But let's say yesterday, if you were watching YouTube, and I was watching YouTube, and there was talk of going to 30k and then going below 30k, so you thought you were going to be the clever investor. And what you were going to do is you're going to sell your Bitcoin and sit on the side, and then you're going to come back in. You're going to do a bit of short-term trading because you're a genius and you're watching fucking Carl the Moon or whoever. And you exited your position. And then you open it up today and you're seeing, holy crap, Bitcoin's after pumping 11% without me. I better buy back in before the thing goes to 45k. So in one day, you lost 11%. Now, I'll run some numbers on this because it doesn't seem like much damage when you look at it in the present. DCA all the way, James, exactly, you know the crack. It doesn't seem like much damage will be done. But when you run the numbers, okay, if I bought 5 grand's worth of Bitcoin in 2017, okay, and I done that little 11% mistake, that mistake cost me 20 grand. That one decision, I've wiped off 20 grand off from my portfolio. Now remember, I only invested 5k, but because my asset has appreciated and I tried to outsmart the market, in today's terms, in today's Bitcoin value, I wiped 20k off the value of my portfolio. More fool me. This is why dollar cost averaging and hodling is the way to go. Investing, you've probably heard me say it, investing is about behavior. Investing isn't about skill. Investing is, there's an amazing book I encourage you, what the hell is it called? The Psychology of Investing. Can't remember the guy's name, something Housel, Morgan Housel. And he gives lots of examples, but investing is basically behavior and it's just action. And when you try and invest with emotion, okay, because all humans have fear and greed, so we always make the wrong decision at the wrong time, only every time. And when you invest that way, it's a great way of turning 10k into 5k or turning 100k into 50k. I shared the meme yesterday of fucking meet Johnny. He's invested into crypto for 6 months and it was 2 pictures, like a before and after, and it's just like he looked the same, but he's down 45 grand. And I was consulting this week with people. I was consulting with someone who turned 7k into 3k so far. So without strategy, you get destroyed in crypto. In all markets, without strategy, forget it. There's not a single hedge fund out there that doesn't use the strategy. Whereas most retail people, and I'd chirp in the comments there and let me know if you have a strategy down on paper. You know mine is up there, I show it to you all the time. But let me know if you have a strategy. And if you don't have a strategy down on paper and you're just buying a bit and doing a bit and seeing a bit, well, you're going to be giving your money to the people who do have strategies, unfortunately. So I'd encourage people. That's why on my bootcamp, I make people write it down. I get a pen in their hand and I watch them write down their simple strategy, because we all need to have it. Okay? Because in the psychology of investing, you go through that. Let's just say a good example is 2020, when the world was crashing, markets were crashing, everyone thought the world was going to end. Well, some people sold their assets. Doesn't matter whether you owned stock market, you owned Facebook, you owned fucking whatever assets you owned. If you sold them in 2020 in March, what happened? What happens? If you sold your car in 2020 in March, what happened to the value of your car 6 months later, a year later? The thing went through the roof. What happened to the value of any assets you owned? They went through the roof. So by exiting, by taking bad action, by panic selling, people destroyed their portfolio. And the irony is, if some lad was away in a desert island and he was doing a bit of surfing and he didn't know the pandemic was on, he didn't know his portfolio was after taking a 60% hit over a week and it looked like it could go to zero. Well, if he was just surfing and having a crack, and then he arrived back 6 months later, his portfolio would have blown up in a good way. It would have had thousands of percent appreciation because he didn't make a bad decision in a split second. And this is the irony of investing. It punishes people. The other irony is that when Bitcoin's not moving, we get bored with it. Like, I've still been dollar cost averaging. I've been buying my Bitcoin. I've been buying up my 30k and I've been stacking. But most retail people don't. Like, my courses aren't as busy. When Bitcoin was back up at 60, like when Bitcoin crashed in May last year, my courses got quiet. I was like, it's half price. Why not buy it now? And then when the Bitcoin got back to 60 and 67k, everyone was doing my courses. And now they've sort of, we still have a good crew in tomorrow, but it's not packed, because it's just retail people. They only buy when the thing is pumping. And in the very best time to buy, when they should be buying, and you can buy Solana for feckin' a third of the price that it was a few months ago, this is the time to buy it, like. But the irony is we get bored when it's not number going up, and we don't buy. And again, that's just because we don't use strategy. If we have a strategy and we just action our strategy, we win. This is what investing is. It's behavior. It's nothing else other than just behavior and consistency and strategy and action. Volatility doesn't matter to me. If I buy Bitcoin today at 30k and in a month's time it's worth 20k, it doesn't matter at all to me, because I've bought Bitcoin at 12 grand and I've seen it crash down to 8 grand. Today, that didn't matter. It doesn't matter whatsoever. That was a brilliant decision to go and do that. The irony is that people just look in the present and they try and time this market. And as I said to you, the thing moves. It can move 4, 5, 8 grand in a feckin' week. That's why you can't time the market. Ignore the scammers, by the way. I see lots of scam comments in there. The buggers, I'll go through and delete them all. Don't forget the daily exercise. Hit the like button if you're happy with the pump. Flex the guns, lads. Give it a smack there. Hit the subscribe. Become part of the community. But like, the reason volatility doesn't affect me, I had another consultant session there today and we were talking about, you know, how long you want to hold the asset. And my opinion is, if you're not prepared to hold this asset for 4 years, don't go near crypto. Don't go near crypto unless you're prepared to hold whatever you buy for 4 years. You've no business being here. And Warren Buffett said, if you're not prepared to hold it for 10 years, you shouldn't hold it for 10 minutes. And he's probably right. Well, of course he's right. But then volatility doesn't affect you. If I'm in my house here, for ease of maths, my house is worth $1 million, okay? And there's a feckin' property crisis crash, and my house crashes 75% from $1 million. Now, it's not worth $1 million, but it crashes down to 250k. Does that affect me? It doesn't affect me whatsoever, because I've no intention of selling my house. I'll be carried out here in a box, lads. Alright, so it doesn't affect me, the volatility. I know that the market will recover and go up. Houses just always go up. They always have, they always will, because of the fiat standard that we live in. So it doesn't affect me. Alright, and that's the same when you're buying your crypto. If you're buying it and you've no intention of selling it for at least 4 years, so you go through a halving cycle when Bitcoin becomes half as scarce. Now, obviously, if you buy shit, it might go to zero. That's why I teach people, build a retirement, buy good stuff, buy good shit, as opposed to bad shit, because bad stuff goes to zero. And how you classify that is, every 4 years, if you go back, I've CoinGecko open here, but if I go back and I go CoinGecko 2018, the list is very different. So I only want to buy things, if I'm going to hold it for 4 years, I want to make sure it's still here in 4 years. And if it's in the top 10, I don't want it in 4 years' time to be in 200 position and its market capitalization to have dropped. And that's what a lot of people make the mistake, is they're overexposed to high risk stuff that generally will fail, and they're underexposed to the sure things, the winners, the back-end winners. But I like back-end winners because crypto itself is a risky asset class. And boring works. You know, a boring investment strategy works. This is the irony of it, is that it's easy to do. You just got to take the action. Just like losing weight, it's so fucking easy to lose weight or to get fit. It's so easy. Or should I say, it's so simple. But it's not easy, maybe. Maybe you could say it's simple, not easy. Like, you want to get fit? Just get out the door, put your runners on, go for a walk every day. You'll get fit. Go for a cycle, go for a swim, go to the gym, whatever. It's not that hard to do the thing. It's just that people we struggle with consistency. Investing is the same. You dollar cost average and you accumulate assets. You fucking live below your means and you buy your assets first, and then you use what's left over to have the crack. And then you defer your gratification, and in a short period of time you have an asset portfolio which appreciates, and now your assets are growing. So without you having to work, your assets are just worth more, and they have cash flow. Now you don't have to work anymore. So the process is so easy, and anyone can do it. Live below your means, like it's just like it's simple, but it's not easy, because we're like, well, feck it, like, sure, I want to spend the money on something nice now. So it does take a bit of discipline and determination. Dinny, do you reckon holding long-term risk Cardano and Polygon is really risky to Bitcoin? Of course it is. It's way more risky than Bitcoin. Countries are adopting Bitcoin. Yes is my answer to that. Would I still hold them? Yeah, because they might outperform Bitcoin, so I'd have a small exposure to them. But I wouldn't be like stacking Cardano thinking Cardano's going to be sound money of the future. Like, do a bit of digging into the history of Cardano and see where it came from. It used to be a scam coin, and they sort of pivoted it, but it was used as a fucking gambling coin or something, as I remember. It was some fucking, what's the story on there? It won't come to me anyway, but do some digging into Cardano. It has a fairly shady past. So yeah, it's certainly not going to become the sound money of the future as Bitcoin may. We should, anyway, it's nearly time for me to crack this bad boy, the Surger. I just took it out of the wrapper, and I'm looking forward to having this lovely can here. I better go before it gets cold. Guys, got a boot camp in the morning. Remember, if you want help to build a retirement plan around this asset class, so you build your retirement plan leveraging all the great things that Bitcoin has and does. You leverage your stable coins, you leverage Ethereum and lending and all this other stuff in stable coins, so that you can create a retirement plan. Something that's going to be here, something that's going to grow in 5 years or 10 years, and it's not going to be like fucking Litecoin was the top dog there 6 years ago, or fucking, pick your coin that has came and gone. XRP, banks were all going to use it. Yay, let's buy the $4. And what is it today? 80 cents. People have lost their ass. If they own Bitcoin, they'd increase their net worth by a couple of 1,000% in the same time frame. But at the time, XRP was the latest and greatest, and we all needed to have it. Don't fall for that stuff, lads. Hopefully you're getting a bit wild to it. Set yourself up for your future. De-risk your portfolio. Learn how to rebalance. And you're involved in the highest performing asset class in the world. Like, you should be creating financial freedom for yourself here in a couple of short years. But if a lot of the guys I consult with are here since 2017, they haven't done that because they've chased pumps and they haven't backed winners, and they haven't dollar cost average, which means they only buy when the price is pumping and they don't buy when the price is dumping and no one else wants it. But that's how we win. Okay, guys, have a super Friday evening. I'm going to jump off, have my can, busy day tomorrow with the bootcamp, and looking forward to chatting to you soon, and let's see where this market goes. If it goes up, I'm happy. If it goes down, I'm happy. Remember, I ain't selling no Bitcoin. I'm not selling it next year. I'm not selling it next week. I'm not even selling it in 2 years' time. I'm a hodler. I'm stacking for the future. I think this thing's going to be worth a hell of a lot more. I know that the Bitcoin's running out, but I also know that 3 million people open a Bitcoin wallet address every week. So I think the number's going to go up. Guys, have a good evening. Dinny out.